Changing dealer groups. Always the last thing an advisor wants to do, but sometimes a necessary evil. G'day, my name is Connell and I'm an advisor. I also run a boutique dealer group, and maybe it's because I sit on both sides of the fence, advisor on one side, dark side on the other. I tend to get asked a lot of questions on a broad range of topics. In this video, I'm going to talk about something that is very, very common, is changing dealer groups. What's the process to change? How do I choose a new dealer group? What should you ask? What should you avoid? How long does it take? How do you navigate your outgoing license? Should you get your own license? In this video, I'm going to try to answer some of those questions and maybe a little bit more. Firstly, I want to touch on a really common question and often a stopper for people wanting to switch licenses. Do you need a foundation or new SOA when changing licenses? No. Well, maybe. It actually depends on the providing entity. Who originally gave the advice? Have a look at this Q&A from ASIC. It isn't a definite yes that you need a foundation SOA. Ultimately, it is up to the license you'd be going to, but it's definitely a question to ask. And if you are coming back to this topic from a while ago, there may now be some light at the end of the tunnel. What is the process when switching licenses? The short version is this. You need to check your existing agreement, see what your notice period is, and give notice to the existing license. You may want to line up and get a preliminary approval from the license you're going to, so you actually have a new home. During your notice period, your existing license will probably want you to do some additional compliance checks, which is completely fair. They may want to do an exit audit. They may need to get some copies of your files. They may need to remediate some of your files if they find anything. So even if you have, let's say, a 90-day notice period, it doesn't mean you're going to get off that license in 90 days. And if your files aren't up to scratch, yes, it could take a little longer. You may be given something called a transfer deed. This is an agreement between your old license, your new license, you and your business to agree to a few things. The idea generally is drawing a line in the sand and saying, before this date, compliance problems are the old license. After this date, compliance problems are from the new license. However, there are conditions in this agreement that can make your transfer more onerous, and you definitely need to read that deed carefully. I've seen transfer deeds that state you need to review every single client within 30 days, which is pretty much impossible. The good news is you can negotiate a transfer deed. So get that help from your new license and get them to help you negotiate on your behalf. Once all that documentation's done, deeds signed, your old license will take you off the register. Generally, it's the following day that your new license will put you on their register. You should also receive a few things. A release letter from your old license, an acceptance or an AR certificate from your new license. And once you're on the register with a new license, you can then go and apply for product codes and start transitioning clients. I'd say about 70% of product providers will let you keep your same codes. 30% of product providers will make you have new codes. Generally speaking, I'd say you could get clients transferred over in under 2 weeks. There are a few older product providers that may take a little bit longer. I have a few in mind, but generally speaking, it isn't as long as you think it would be. I also wouldn't worry about losing income. Traditionally, your old license will continue to transfer you revenue over a 3-month period. Of course, you also need to tell your existing clients that you're changing licenses. The transfer deed will often have an example letter of what they want to send you out, what they want you to send out to your clients, and what that letter needs to contain. How do you find a potential dealer group? I think you should start with a shortlist of at least 6 different AFSLs. Asking BDMs, talking to other advisors, talking to some of the big groups is okay. However, try and dig a little deeper to get a broad range of options. You might find a license that really suits your niche or your style of advice if you just put in that little bit extra effort. A great resource for a number of things, but this too, download the advisor dataset from data.gov.au, find some advisors in your local area, see who they're licensed through, and reach out and have a chat. Now you have your shortlist. How do you choose a license? Well, The first obvious question is, why do you want to leave the license you're currently on? A common reason is frustration around compliance, increasing licensee fees, but how do you know that the next place you're going to is any different? Or is it just a case of it's better the devil that you know? I suggest you ask your AFSL shortlist really specific compliance questions. I had once that an advisor ask us to audit one of his files so he could see and compare the two audits and see what sort of feedback he'd get, just to really compare apples with apples. You can also ask questions like, in this case, is it an SOA or is it an ROA? When do I need to get a full cash flow budget from a client? When do I need a risk profile? Do I need to sign fact find? I promise, you ask some of these really specific questions to those 6 AFSLs, you'll actually get very different answers. Other questions to ask a potential dealer group, and I'm sure you know most of these, but I'm going to go over them anyway. Ask about licensing fees, of course, what they include, what they don't include, how they paid. Do you get an invoice or do they just take it from you? What is the minimum licensing fee that you need to pay over a year? Like if you have a percentage split with an AFSL, but you don't generate enough revenue, is there still a minimum that you need to pay them? Sorry, back to compliance. Even if the reason you're leaving your existing license isn't for compliance purposes, you still need to get a really good feel for the compliance culture of the license you're moving to. Ask to see examples of documents. Like I once saw a terms of engagement when you're signing up a new client that asked for 7 different signatures. I've seen an AFSL force an advisor to use their internal paraplanning. They then have paid a compliance check fee on top of that, and they still then failed the audit. So understanding the compliance regime of a license you're going into is super, super important. Get an understanding of what you can and can't control, or what you can and can't make decisions on. Can you use whatever technology you want? Can you alter templated documents with your own branding? I'm still hearing from advisors that dealer groups are enthusiastically encouraging them to use their internal model portfolios. Why? For compliance reasons. And if they don't, they should probably just find a new home. So again, you just want to know this up front. The APL, ask to see it. Ask to see what was the last thing they added to it. See how industry funds are treated on it. See if the AFSL has any agreements with any industry funds, and if you can recommend it to clients and get advice fees from industry funds. Understand how the investment committee works. If you want to add something to the APL, what do you need to do? How long will it take? Paraplanning. Be very, very clear on your paraplanning options. Can you do plans internally? Can you do them yourself? Can you choose your own external paraplanner? This question alone can completely change the profit of your business and your client experience. Being forced to use an internal paraplanning option is potentially expensive, potentially slow, or maybe they just aren't great with the type of advice you want to give. If you're forced to use them, well, you just don't really have an option if it doesn't work out. Personally, I would be very cautious around mandated paraplanners. I would say that 3 out of the 6 AFSLs you talk to will enforce mandated paraplanning, and of course, it will be for compliance purposes. Car agreements, the contract you sign with the AFSL. Things to look for: minimum payment amounts, what's included, not included, contract terms and exit clauses. Be wary of a 12-month contract period. It really means that you're locked in, and once you're locked in, you can't really say too much. They're also going to re-sign you months before your contract period is up. So it's very, very difficult. You're kind of in or you're out. There's no kind of grey. An AFSL has a lot of control over your business. They control your compliance, they control your revenue. So what you're really looking for is a clean car agreement. You don't want to give up any additional power that you don't need to. And then there is everything else. The time to investigate is before you're on board. And don't be afraid to ask anything. You will have this feeling like, I want to give a good impression that I'm a good, compliant, friendly neighborhood advisor, but it's better to find out now if the AFSL isn't a good fit. Other things you could ask include if they have any ongoing activity or enforceable undertakings from ASIC. Ask about their breach register and what's on it. Ask what your PI excess would be. If you had a claim, what would you have to pay? Ask if you're able to have referral fees paid. Ask if you have to pay the advisor levy. How is it calculated? When do you have to pay it? Ask when they do the pay runs and how the timings work. Once you're done asking your questions, also reflect on how the questions were answered. You also might want to jump back in on the advisor dataset again, find an advisor in your area that's in the same dealer group, and compare the answers you were given with an advisor who's actually on the license, and if their experience matches up with the answers that you received. Next, things to avoid. There are a few things that if I were you, I'd avoid, or at least I would make my decision in spite of these things. First, if you're being offered a sweetheart deal, like a 3 months free licensing fees or reduced fees for 12 months, it's kind of like when people make investments for the tax deduction. Don't choose an AFSL for these reasons. If it's a bonus, great, but choose it in spite of these things. Avoid conflated sales tactics, like, we're going to help you grow your advice business. Look, I'm sure there are some great practice managers out there, but from my experience, it's not going to be much more than go and get a referral arrangement with a mortgage broker or an accountant. Unfortunately, somebody who was an advisor for 4 seconds 8 years ago may not be able to add that much value to your business. And lastly, big licenses versus small licenses. I'm not going to blatantly say you should avoid big licenses. However, I've definitely heard more compliance frustrations from advisors who are coming from larger licenses, which makes sense. They need to accommodate for the weakest link in the chain. Larger compliance departments make for inconsistent compliance responses, etc. I will wrap up with one final comment about moving dealer groups. There are some good licenses, there are some bad ones, but then there's some licenses that are right for you and your business, and then some that are not. The whole point of all this is what you're looking for is a license that's right for you and your business. Oh, sorry. I also mentioned self-licensing at the start. I'll give you the cheat sheet, but maybe I'll do another video on just self-licensing if people are interested. If your business is doing $250,000 or more and you have a bunch of free time, then self-licensing could be an option for you. Or if your business is $500,000-$600,000 plus, you could probably exchange your licensing fee for the costs of being self-licensed and have money left over to have someone manage it for you. I hope this has been helpful. If you have any questions, you're welcome to get in touch. And yeah, good luck with changing dealer groups.